Good morning, ma. Welcome to Alpha Online Education. Commerce theory part for the first year's English medium chapter that we are dealing with. That is the 7th chapter, Commencement of the Business, and this is the last session of this chapter, 6th session. So whatever the types we have remained in the section, previous session, in the 5th session, that we will cover in this session. So the next is shelf prospectus. So Section 31 Companies Act 2013 defined that prospectus that have been issued by any public financial institution, company or bank for one or more issue of securities or classes of securities as mentioned in the prospectus. When a shelf prospectus is issued, then the issuer does not need to issue a separate prospectus for each offering. He can offer or sell securities without issuing any further prospectus. So according to it, if a public company or financial institution or bank, anything that is public, okay, that is that want to raise the capital, for that if it will be issue the shelf prospectus, at that time it can issue one or more issue of securities. It can issue more securities, one or more securities or classes of securities, means like equity shares, preference shares, debentures, like this type of different securities it can be issued as mentioned in the prospectus. As mentioned in the prospectus, how it is mentioned in the prospectus, according to that it can able to issue. Okay, when a self prospectus is issued, then the issuer does not need to issue a separate prospectus. If you are issuing a shelf prospectus, at that time there is no need to issue again another prospectus. Okay, prospectus is not needed again issuing. Okay, for each offering he can offer or sell the securities. So when he want to sell the securities, simply that it is the final. So whatever the things that have been we want to get from by issuing the securities, we can issue it, and after issuing the shelf prospectus, there is no need to issue again and again other prospectus. Okay. So arbitraged prospectus means shorting the prospectus according to section 3 according to section 33 subsection 1. So what is he saying means, when any form for the purchase of security of the company is issued. Okay, if any form is issued in order to purchase the securities of one particular company, it must be accompanied by an arbitraged prospectus. Okay, when a form is issuing for the purchase of security, then the prospectus will be shortened. Okay, it will be reduced, it will be short. So it contains all the useful and materialistic information. It only contains whatever the information needed, what is important, only that information is contained in the arbitraged prospectus. The unnecessary information is not contained in it. It is shortened by removing all unnecessary information, so that the investor can take a rational decision, and it also reduces the cost of public issue of the public issue of capital, as it is a short form of prospectus. So by issuing these type of arbitraged prospectus, the decision maker, the investor, can take the decision quickly, and it reduces the cost of public issue. Okay, issue of the prospectus, because it is very short, so it can be easily understood by the investors. They can take the decision, unnecessary information is deducted. So that is why this is very good type of prospectus. Among the different types of prospectus, arbitraged prospectus is better, short and sweet it is. Deemed prospectus. Okay, next one is deemed prospectus. So according to section 25 subsection 1, according to section 25 subsection 1, any document by which an offer for sale of any security in terms thereof, then such document shall for all purposes be deemed to a prospectus. So for the sale of any securities, okay, for the sale of any securities in terms of then such document shall for all process. So if there is any offer for the sale of the security, at that time deemed prospectus will be issued. So it will be used for the sale of the securities. If there is any offer for the sale of the security, at that time these type of document will be issued. So this is about the types of the prospectus. So let us concentrate on the other topic, that is minimum subscription. So what is the minimum subscription? Means whatever the amount the public company has to be gathered from the public, that is the minimum subscription. If the public company fail to gather that amount from the public, at that time they have to give back that amount to the public. Let us see. The minimum amount of the capital to be collected out of the total issue. So minimum amount of the capital they have to be collected from the total issue. Whatever the total they are issuing, from that they have to get minimum amount, okay, by a public company before the allotment of shares. Before allotting the shares, the company should have to get the minimum amount of subscription, okay. Nowadays it will be 90% of issued capital. If the company fail to get the subscription amount, minimum amount, at that time it has to return back the amount what it has taken from the investors, okay. So generally this subscription amount is fixed on the basis of the amount required for the purchase of property, okay. With the issue of these securities only, the company can purchase the property. Amount needed for the payment of preliminary expenses, means any other expenses for the payment of those expenses. Amount required for working capital for day-to-day activities, yes. The amount required for any other expenditure for the formation of the company, okay. On the basis of this, the minimum subscription amount is decided, or it is fixed, and it is very important. So the minimum subscription amount at present, that is 90% of the issued capital that the company should have to get. If it failed to get that amount, it has to give back the investors whatever the amount it has collected, okay. That is about the minimum subscription. Next is certificate of commencement of business. Certificate of commencement of business means for private companies there is only one certificate is enough, that is certificate of incorporation. Already we have discussed this topic in the previous sessions, okay. For private companies only one thing is enough, that is certificate of incorporation. But for the public companies two types of certificates are required. One is certificate of incorporation and next one is certificate of commencement of business. These two certificates are required for the public company in order to start its business, okay. So it is very mandatory, yes. For that it has to issue the prospectus, it has to file, it has to get filed memorandum of association and article of association with the registrar and also the prospectus, and it has to raise the minimum subscription. Then only afterwards at the end it can get the certificate of commencement of business. After doing this all the things, the final stage is that it will get the certificate of commencement of business, and also it get the certificate of incorporation. With both two certificates only it can run its business. Let us focus on the last topic of this chapter, statement in lieu. So in case a public company raises its capital through some other means, there is no need to issue prospectus. For example, the public company is raising its capital by issuing some other document, other statement other than the prospectus, then there is no need to issue again the prospectus. If the company is issuing this statement in lieu of the prospectus, at the time there is no need to again issue, okay, lieu. So if it issuing the statement in lieu of prospectus, then there is no need to issue separate document of the prospectus, okay. So this statement is signed by the directors and drafted according to part 1 of schedule 3 of the act. So this document should have to be signed by all the directors, and also it is drafted, means it is prepared according to the part 1 of schedule 3 of the act. According to the act, that particular act, this statement in lieu is prepared, okay. So this is about the types of prospectus. Minimum subscription, that will be 90%, they have to be raised. If they fail, they have to give back the amount what they have subscribed from the public. That is about the minimum subscription, and certificate of commencement of business means in order to continue the business by the public companies or public institutions, whatever it may be, they have to get two certificates: certificate of incorporation and certificate of commencement of business. And this is a statement in lieu. Okay, so this is about this chapter. So this is most important chapter. Please don't quit anything in this chapter. Okay, let us meet in some other session with some other topic. Yes.